Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. I guess now it's Tesla in and Nvidia out. No, this video is not about Tesla, my Esla, but it's great to see it beat the delivery expectations. In this video, I will tell you why I believe it's not that Nvidia's AI superiority that created this Gen AI bubble, it's something else, something more insane. And it's beyond the level we have never seen before.
Engineering the most advanced chips and systems and the software that makes them sing. So robots can lend us a hand. Cars can drive themselves. And even the Earth can have a digital twin.
Why I believe Nvidia will crash the stock market and take everything down with it. Also, what's going on with the bond market TLT lately? This chart is the equal weight S&P versus the S&P itself, and what's so concerning here is that we have the S&P, which is up 14.35% year to date. The equal weight is up 3.42%, and what's this tell us is that there's this massive divergence occurring where the mega caps like Microsoft, Apple, and Nvidia have really just taken over control. They've dominated to the point of way over evaluation. What this is telling us is that so many of the other companies in the S&P are actually down, like Nike, Lululemon, PayPal. How long do you have to wait to get some action in PayPal stock? Jeremy's private groupers probably goes gray before PayPal stock comes back to life. Other Cathy Wood stocks like Zoom, Roku, and Block don't get any love from Wall Street. Even the legendary Shopify stock is struggling to get a bit right now. The point is how shallow this market really is. If you took big techs out of the S&P, would be here at 3.42% or even lower, maybe even negative for the year. And what that tells us is that all the money flow is going into these names and puts the market at extreme risk. And historically, when you see this, it is not good news for the next 6 to 12 months. The problem is this. If you go back to 1999, you saw the same thing happening, and what happened to the Nasdaq is that it dropped 65% when we saw the tech bubble collapse. And so when you rely on too many of these companies, it's not healthy. Number one, it tells us that the underlying economy has a lot of problems. And number two, there's always a reversion trade at some point where people get too greedy. And then at some point, the fear comes in on these names, and boom, the crash follows. Nvidia has reached a new all-time high not too long ago, and it has been retracing ever since. It has at one point very briefly surpassed all the other companies to become the most valuable company in the world, ahead of Apple, Microsoft, and everything else. So let's take a look at the charts for Nvidia and what you see here. Number one, we got a reversal candle on the daily chart, and this is a powerful signal where you gap higher, you make new all-time high, and you actually close sharply lower on the day. We then had follow through for 2 consecutive days. And essentially what has happened now is you're making what's called a bear flag now. Everyone expects the world from Nvidia by now. Just like they did for Cisco in 1999 and 2000. And the problem is that other companies are already starting to develop chips now. Does Nvidia have a huge advantage right now? Yes, but that advantage will narrow over time. Eventually it did for Cisco Systems. And ultimately we know what happened there. And by the way, one other amazing stat is when the company is the biggest market cap company in the US, like Cisco was in 1999 and 2000. It got as far as 80% above its 200-day moving average. Nvidia just surpassed that with 104% above its 200-day moving average when it was the biggest company in the stock market. That again to me is a warning sign on a technical analysis basis. The reason why people compare Nvidia to Cisco is because just like the internet is real, AI is also real. Cisco Systems helped build the internet the way it is today. Just like Nvidia is going to help build and train all different kinds of AI and robotics. Human nature doesn't change. This is why GameStop runs on hype and then gets crushed back down. Greed and fear rule the markets, and so it almost has less to do with the technology of AI. Because if it is about technology, you will see AMD soar with Nvidia because AMD Instinct MI350 is better than Nvidia's Blackwell B200, according to AMD. When you compare AI to the internet, of course, it's going to change our lives. It's going to be monumental, and it will be, but it hasn't happened yet. The robotaxi network is still in the works. Gen AI companies don't have real earnings yet.
Will you have customers that you're going to be customizing algorithms for them, or how is it going to work?
You know, the honest answer is we have no idea. We have never made any revenue. We have no current plans to make revenue. We have no idea how we may one day generate revenue. We have made a soft promise to investors that once we've built this sort of generally intelligent system, basically we will ask it to figure out a way to generate an investment return for you. It sounds like an episode of Silicon Valley. It really does. I get it. You can.
But it doesn't stop the mania from taking things up. Bitcoin at 69,000 was a mania. It corrected to 15,000. So manias are based off of human nature.
Here it is. This is your future. One of your Pied Piper boxes would go right here in this rack.
Okay.
Okay. Let me show you the next location in which we would install one of your boxes.
Richard, what the fuck are we doing here?
And don't worry. We still love our fun and games.
It's actually why psychology in investing and trading is so important. And that's why, in my opinion, ultimately, you'll see the ultimate outcome, which is probably, honestly, a huge correction in Nvidia over the next couple of years, at least 50% down. That's assuming that the fundamentals don't hold up and the company doesn't continue to outperform with their earnings and revenue beats. People need to use common sense here. Nvidia is absolutely crushing it right now, and they will probably crush it for the next 3 months. But the key here is, literally, there were no competitors before. Now AMD could take shares from Nvidia. Microsoft is already using AMD's MI300 for Gen AI training and inferencing. So does Meta. How many billions will the hyperscalers be willing to invest into Gen AI without any returns before their shareholders say they had to stop? It's like when Meta keeps spending more money in the metaverse. That ultimately crashes the stock down to $88 a share. When they can sell a chip for $30,000 or $40,000, you tell me margins are going to remain at 77%. The answer is no. Not even close, and that's assuming that we don't see slowdowns in data centers. Also, Nvidia is on the cusp of being charged by French regulators in anti-competitive behavior. You see, Nvidia keeps on announcing new AI chips. Just 3 months after he demonstrated Blackwell, there is Rubin, which expected to arrive in 2025. This chip, referred to as R100 AI GPU, I mean, the economy is clearly weakening at this point. All of these are just things that common sense tells us, but people don't want to believe them right now. Other than Nvidia stock, we need to talk about what's happening in the long bond market. You know, TLT just crashed below its 200-day moving average again. That's because the Bank of Japan needs to dump U.S. Treasury in exchange for U.S. dollars and sell those dollars on the open market to save their yen. This is why I said don't trade the long bond. It's not worth it. Check out this chart from the New York Feds and you look at the probability of a U.S. recession predicted by Treasury spread, aka the inverted yield curve. I told you that still matters before. You're watching this right here. The probability of a U.S. recession predicted by the New York Fed is sitting at 52% right now. It was at 70% last year, but it's been above 50% for more than a year now. That is the highest level since 1981. This is much higher than 2001. 2007, it's much higher than 2008. I just find it bizarre that during 2008, when we had the big recession, the great financial crisis, the probability of recession, as indicated by this particularly Treasury spread by the New York Fed, was only 40%. So yeah, technically speaking, we are at a much higher chance of a recession than ever before. And it just hasn't happened yet. Doesn't mean it won't happen though. If you kick the can down the road, a big problem will become bigger. A hard landing will become our worst nightmare.